Economist Stephen Roach is considered one of the world's leading experts on China. He's the former Morgan Stanley Asia chairman and now a Yale senior fellow. Stephen, great to have you with us. What should we expect, if anything, out of Secretary Yellen's visit to China?
Well, it comes at an important time, Melissa, as all these visits do. First of all, when you're talking about the Xi-Biden call, you got to cut the time in half because of consecutive translation. So they each got maybe, 45 minutes of airtime. But Secretary Yellen has got to deal with this imbalance between supply and demand, which is putting too many Chinese goods into the market right now, and a source of concern for the U.S. side. I was in Beijing last week, and there's a lot of talk about manufacturing and upgrading the production on the supply side, but a lot of hand-wringing over the lack of demand. So that imbalance is a big deal.
And at the same time, we had many U.S. CEOs over there in Beijing meeting with President Xi in the sort of orchestrated meeting. So there is this acknowledgement on the part of Beijing that they need American business, and yet there's this strained relationship that runs underneath. Stephen, I'm wondering what you think of this relationship and how it will be as we approach the elections, particularly when we're looking at a potential Trump presidency. He's already, threatened very steep tariffs on Chinese goods.
He has orchestrated, choreographed is a good word to describe last week's meeting. Certainly China has demonstrated a willingness to continue to tell American businessmen that China is open for business, and American businessmen have been more than delighted to echo that same sentiment. But they remain cautious. I was part of the group that was in China last week. Sentiment is weak. The Chinese policymakers are still giving mixed signals on their receptiveness to U.S. business. So, it's pretty much a jury's out on where this is headed.
Hey, Stephen, it's Tim. There's a lot of codependence that these countries have together. And so whether it is international dynamics, but the diplomacy is welcomed. Do you think Yellen heading to China is there anything related to just what's going on in Treasury markets or the biggest buyer of our treasuries? And, are you at all concerned about this dynamic? It's clear the Chinese central bank buying of gold and other diversifiers away from, buying the stuff that historically China couldn't get enough of.
Well, Tim, I hear you on codependence. I wrote a book on that several years ago myself, but I don't think that Secretary Yellen's visit is to talk much about China's role in buying gold or buying U.S. treasuries. I think it has much more to do with just ongoing dialogue, part of the continued communication on strategic economic issues, especially now this supply-demand imbalance that I alluded to earlier.
Stephen, we got some manufacturing data out of China over the weekend, and it was better than expected, signaling that their economy is out of contraction. Did you get any reads on the ground there that would maybe just kind of say, okay, maybe there's some sort of bottoming process going on here, maybe from some of the contacts you have away from the government?
Well, there's hope that the worst is over. The premier did address the China Development Forum in the opening session and spoke hopefully about trends in the first 2 months of the year. But, these are tentative reads at best, given the shortfall in Chinese growth last year. And I think there's still a lot of nervousness in Beijing as to where the economy is headed in the months ahead.